yeah, tell me a little bit more about yourself.
Yeah, so I was kind of the founder or sort of joint founder of Compliancy Services, along with a guy called Ian Stephen, and the majority shareholder at the point that we sold, and then I became a non-exec, and in 2024 we sold again, and that was my story with them, and we grew up from our back bedrooms to hopefully what I would consider a market-leading consultancy. It now goes by the name of Cosegic, and it's a really high-quality company that supports a lot of clients. And I think the point to which I left, we'd supported something like close to 3,000 regulated firms of one sort or another. So that was an incredible journey to be on. And of course, that gave us really wide exposure right the way across the market. So you've mentioned being on the buy side in asset management. Well, that's a very exciting sector to be part of, but it's just one sector of a strong financial services industry in the UK. So yeah, we dealt with banks, we dealt with payment firms, we dealt with insurance firms, etc. So that was my background, and I personally got involved in a lot of regulatory transactions. I was a director at the APCC, the Association of Professional Compliance Consultants, and founded the crypto working group, and before that, the authorizations working group. And we worked really closely with the regulator to help them improve their process. I think that was a great two-way street. So that was the context from which I founded my compliance centre.
Yeah, and I guess with you mentioned payments there, I noticed on my compliance center you've now got a payments section, or I guess a new area of my compliance center. So I suppose with the move to the FCA being the payments regulator, is that kind of what drove that new payments GRC system?
Okay, so when you say that, so the FCA has always been the regulator for payment services since PSD1 came in 2009. I think you're possibly thinking about the PSR that regulates the payment systems and the fact that that's going to be
Yes, yeah,
disbanded.
yeah,
Is that
yeah.
what you mean? Yeah. No, so look, there's something like, I forget the exact number, 12 or 1500 payment services firms as opposed to payment systems already regulated by the FCA. And the FCA was really light touch on those in terms of supervision until maybe 2018, 2019, when the second Payment Services Directive came in and it tightened up a little bit. So as a sector, they're probably a little bit behind the curve, say, compared to asset management. So if you take a system like ours, I would guess maybe 80% of asset management firms would have an equivalent system in place one way or another to support their core compliance operations, whereas in payment services, that probably would be less than 10%. So that was the driver. It's a pure market driver, Anastasia, to try and seize an opportunity because it just feels like they might be implementing more compliance technology in the next couple of years.
Yeah, and I think, in relation to the FCA and how that they're moving along, like one of the things I'm curious about just in general, because the FCA is taking on more and more and more responsibility from various sectors, including now being the sole AML regulator and things like that.
Yeah.
Do you think they have the capacity, and what's your view on kind of the internal expertise of the FCA to be driving all this change, and then also being like sole regulator, and then crypto and new digital
Yeah.
assets and all that kind of stuff? What do you think about the resource capacity?
Yeah. So I think it's easy to be critical of the FCA. Overall, I'm more complimentary than I am critical about regulators. They have a really tough job, and it's the politicians that move the risk appetite around them, the goalposts around them, that probably cause most of the problems. I think if we don't have to go back too far to remember that we used to have a sole regulator, and then that all went wrong, and they decided to have two regulators, and the PRA was born in 2014, I think. And I do think there's generally a challenge when you have too much done by one institution. There's also a challenge when you have too many regulators and too many regulations. So I'm not sure that anybody's in a great position to say exactly what the solution is, but we have definitely been here before, whereby a single regulator was doing too much and kind of lost track of what was going on with systemic risk. I'm talking about the credit crunch, obviously.
And I guess in terms of their supervisory approach, what's your kind of perception of where that's going? Again, in alignment with the fact that they seem to be taking on more work, but then simultaneously they're expanding their divisions for supervisory divisions in certain ways, and also utilizing tech and are really driving that within FCA enforcement action. So do you think supervisory enforcement will get greater effectively, and as they are able to speed up actually getting enforcement action done?
No, so I think I'm right in saying that they have been closing enforcement cases because they were just hanging around too long. They didn't have the resource to
Yes,
get
I've
through the
seen
work.
that.
Yeah.
Yeah.
But also, I actually wrote about this on LinkedIn recently. They have a wide range of supervisory powers, and the enforcement action that actually makes the headline is just the tip of the iceberg. So, all sorts of VRECs and impositions they can make on firms when they don't like what's going on. And I think I'd need to check out my article, but I think there's something like 200 firms with some sort of voluntary requisition on them. I've got the data kind of properly analysed from the register. So that's a lot of different activity that they're undertaking. And I think it is absolutely data led. When I think about the case that firms might make for using technology like ours, maybe they should look at what their regulator's doing. And what their regulator is doing is using better technology and better data to drive its conclusions. I think the regulator's been put under an incredible amount of pressure. Um, so whenever anything goes wrong, of course, they get blamed, and then they tighten their risk appetite. And then politicians a year or two later say, oh, the regulator's risk appetite is too tight. Why on earth have they done that? And they just live in this kind of circular sort of bubble that they have to deal with. And I admire the way that they deal with it. So who would have guessed that 3 years ago that we'd be saying the regulator should be loosening its risk appetite? But that's what's happened over the last year or two. So it's a I'm old enough to have seen this cycle repeat multiple times. And I think the regulator, I'm generally sort of sympathetic about its position. It has a lot to do. Whenever anything goes wrong, it just gets blamed. And of course, things should be going wrong. We shouldn't have a zero faults regulatory system. That would imply far too much supervision and far too great a cost to comply. So, yeah, I'm not quite sure I've answered your question there, but I think the FCA is delta-handed. It doesn't necessarily request, and it plays it pretty well.
Yeah, and I think that's fair. Two points I want to pick up on that you mentioned. One of them being that they're increasingly data driven. But I suppose when you're looking at the businesses that they're regulating, and this might just be my personal view from seeing kind of transformation and working with firms to get them to a place where they're, for example, integrating technology, but the underlying data seems to still be quite a core issue. Is what's the data you're actually putting into these systems? So bad input, bad output, whether we're talking about AI or any other kind of system that you may have implemented, whether you're in compliance or elsewhere within financial services. So I suppose from the perspective of the FCA being data driven in terms of their enforcement actions, there's limitations to what they can achieve with what they have. But I suppose a question for me is whether or not they're getting bad data in and bad outputs out. But the only way perhaps they'll even know is to kind of challenge what they
Yeah,
are seeing.
yeah. So I guess it's a good question. How do we know that all the regulatory reporting that takes place is accurate? But I think generally firms are trying to report strong and accurate regulatory data in their regulatory reports. I think it's more complex with institutions like banks who have a very significant regulatory reporting burden, and it's a very expensive exercise for them. And banks struggle with quality data, as do quite a few larger institutions. So the FCA takes the data it gets via primarily regulatory reports, and it then cross-references that with everything else that it's finding in the market. And then it will go through all sorts of thematic processes, and it will request direct input from different types of firms, and it's triangulating all of that to draw conclusions. It's true, rubbish in, rubbish out, but again, I think they're probably doing a pretty good job. You look at the supervisory actions they're taking without actually getting as far as formal enforcement. They're trying to influence people to do things better. Then I would think they're winning.
Mm. Yeah, and another point you mentioned is, well, you said, oh, I've recently published something on LinkedIn. That's kind of how we got to know about you in the first place. And I only got to know about of you and specifically my compliance center after leaving the buy side to start my own consultancy. And what I love about the way that you approach your LinkedIn posts, or a lot of the ones that I see, is kind of your angle of I am the head of compliance, and what does
Yeah,
that mean, and what does it
yeah,
look like, and then because obviously we all see a lot of LinkedIn stuff, and I post on LinkedIn for a variety of reasons. Sometimes thought leadership, sometimes it's because I have a strong opinion or view on the way that something's played out. But as I say, I really like your posts about the ones that I am the head of compliance, because
yeah,
having been a compliance manager in my previous life on the client side, well, what would be now my clients, I can really resonate with those posts. So how do you come up with that content? Is it because of that's what you've seen in your
yeah,
client base through the
yeah,
consulting side, or is it
yeah.
through my compliance center?
Yeah, so a bit of both. So I think compliance is complicated, right? So I've moved on a little bit from my head of compliance strap line to compliance is complex. I like these evolutions, like this new stuff. So compliance is complex, and the reason it's complex is we have a wide range of things to do. So most people will not understand, again, what's underneath the iceberg in compliance to create the outputs we want. They will understand that we've got all these different stakeholders that we've got to satisfy, and they probably don't understand that in actual fact, if you look at the career development the average head of compliance goes through, nobody teaches them about tech implementation generally. Yeah, they're going to learn a lot about policy and less about process and less about some of those other commercial things through their formal development, unless they really go out of their way to learn that stuff. And then it's the timing. So how do I know? This is one of my things with people I coach. How do you know? How do I know if I've had a good year, if I'm the head of compliance? Right. So there would be heads of compliance in 2008 thought they were doing a pretty good job, and then 18 years later, 17 years later, the regulator decided that they weren't, and the business that motor finance companies was writing was illegal. So there's a real challenge around this ambiguity of what it takes to be successful in compliance and to be an effective head of compliance. And I've referred a few times to what I thought was a really good report by the ICA, the International Compliance Association, looking at the future of compliance, and it tried to identify the most important future skills for compliance leaders, and they came up with relationship management. And that's a really interesting conclusion to draw. And that reflects the fact that if you are the head of compliance in any sort of medium to large organization, you have a very complex set of relationships that you probably need to manage really effectively. So yeah, it's,
Yeah.
it's those thoughts that, and if you start thinking about that complexity, that actually gives you quite a lot to write about. On another day, you can get me on the cost of compliance and the cost of non-compliance. We can do that one as well. Yeah,
I'd love to.
there's a lot to talk about.
Yeah, I mean, I remember at my old place of work, they always used to say, "Oh, Anastasia, you need to get into sales. You need to get into sales." I'm like, "Yes," because senior compliance leaders, you are selling
Yeah,
effectively. You're
yeah,
selling why something is a good idea, even if sometimes it seems like it's more challenging in the moment, but it's for the greater good in the long run. So I
absolutely.
100% agree that relationship management, regardless of the ICA report or otherwise, it's a really key skill, and perhaps even a key skill for anyone, I suppose, in junior roles to develop, because at the end of the day, if we are moving towards a progressively tech dominated environment with any type of industry, what will be critical, what people will be paying for, is that human to human interaction and being able
Absolutely.
to deliver the message
Yeah.
of what's the tech output, okay, your decision making, and then delivering that message appropriately. um, you just made a point about, oh, I like evolution, and I guess that's also another key skill to being a really good compliance officer, in my view, is the fact that you cannot be precious about someone, even when you have team dynamic changes or whatever. I've always thought or considered, if no matter junior, senior, whatever, if there is feedback within the division, or as regulatory changes is evolving, you cannot be precious about what you did yesterday and say, actually, no, that's still good enough. So how do you I guess, either advise, or how do you see that evolution within a compliance team, and how do you overcome the challenge of always being kept on your toes and always having to push forward and drive forward towards better processes, better change management, etc.?
Yeah, so I'm in danger of coming out with a few cliches here. So change is constant in regulation in particular, and there will be people that struggle with that. They will kind of on a conscious level think they can deal with it, but some people don't necessarily always like change and like new stuff. Um, and change comes in different ways. Change comes within our organization. That applies to everybody. All organizations are moving all the time, and change will come from within our team and all that stuff. But change also comes from regulation itself. We know that the external environment moves on, and it moves on even without the rules changing. The regulator changes its risk appetite, as we were talking about before, and all of a sudden something that was low risk is just top of the pile. Okay, and that really requires you as a compliance leader to be able to think, okay, things have just changed. Are we able to respond? Is a great question to be asking yourself. Okay, if I was asked for evidence tomorrow of X, Y, Z, this thing that's suddenly become important, can I evidence it? It's a question we should always be asking ourselves. So it is a state of mind. It's really important to be self-aware and to know whether you like change and you're moving with it, or whether you're wrestling and fighting it. It's there's some judgments to be made about when to use technology and when not to use technology. How many people do things like carry out an audit of the processes for which they're responsible, and are genuinely honest about those which are mature and which they've solved for, and those which aren't. How many people take that to their board and say, look, just so you know, these are the trade-offs that we've got. We don't have the resources to address all 45 things that you think I'm doing to a really high level. So these are the trade-offs I've made, etc. So those things, they cause dynamism in the environment, and I think the starting point is to be self-aware, just to understand if you're always moving and you're always looking forward, and secondly, to make sure you do take a step back and say, okay, what has changed for me recently? And it might be really obvious because consumer duty just came in and that affects everybody, or it might be something a lot more subtle.
Yeah, and I guess on that point about, really documenting things very well and making sure that the records are kept and the board is kept well informed. I suppose you kind of need data to drive that decision making. And from your perspective, obviously you have a RegTech product and a
Yep.
solution that will assist or aid in delivering management information, keeping on top of what data's coming and going within the compliance department. What do you think actually can't be part of that? I guess technological data. What else in terms of like conduct risk potentially that you can't monitor for, that you have to do as a human, and it can't just be
Yeah.
within a tech system? What do you think can't be automated or part of technology, even regardless of how good your platform or your system is, or any other GRC system?
Yeah. So tech supports because it automates, it creates time, it provides information, it supports insights, but it's not a human being that's exercising judgment. So that's the starting point. The other thing is that tech doesn't create culture, and culture has become a really big thing in regulations, become a really big thing in organizations generally. So having great technology in the wrong culture is unlikely to go well. And I think that's a pretty simple answer, and I think that kind of sustains. Um, so I think you asked me in your questions that you gave to me before we met about disclosures, and does having a system to help with things like conflicts and gifts disclosures mean that people are actually going to do it? And the answer is no. The starting point is a culture and an expectation, and being prepared to do things or take action if staff just simply aren't following the policies that we have in place. And the second thing is to then make it easy for them, give them the right tool set, give them my compliance center or whatever it might be, to make it really easy for people to complete their personal account dealing or complete their GIST reports. Both help.
Yeah, and the culture point is important, and I guess it's important, and also I guess one of the biggest challenges, because it involves, recruiting well, it involves maintaining then the people that you have recruited, maintaining their energy, enthusiasm, and also good behavior, for want of a better word. And I suppose, do you think that the non-financial misconduct rules that are coming into asset management firms in September, do you think that will help, hinder? Is it causing more complexity? I mean, the FCA feel like they're giving people more information or more kind of context and ability and definitions so that they're able to better define non-financial misconduct. What's your view on policy versus effectively people just doing the right thing and tone from the top? And I'm sure it's a bit of both, but what's your view on that?
Well, so I think obviously you do create culture in your own team as a compliance leader when you recruit, but I think the culture comes from the top. You just said it's the tone from the top. And the problem for a lot of people, realistically, is when they join an organisation they think it's got a strong culture, and then they discover that it hasn't got a strong culture, and they've got to decide what they're prepared to do about it. And yeah, there's another aspect of the complexity that you have as a compliance leader is if you have a CEO, for example, who simply isn't going to go with what you think is best practice. So I've come across, say, wealth management firms. So this isn't such an issue in the hedge fund sector, in institutional asset management, but I've come across wealth management firms on multiple occasions where you get director level people that simply say, I'm not disclosing my personal accounts deals. I don't see what that's got to do with the company. I don't feel conflicted, so I'm not telling you. What do you do about that? You know, that isn't very easy to deal with. So, yeah, I think there's a lot to be said for finding yourself in the right organisation with a supportive board and yeah, a shared vision as to what the right culture is. Non-financial misconduct, I think you could argue it was always there. Having more clarity around what it is and what the regulators' expectations are, I think is helpful. But of course, it's just additional regulatory burden for firms who already have a huge regulatory burden. And I saw one analysis by a consultant who found over 20 different areas of the overall GRC set of frameworks that were going to be affected by non-financial misconduct. You know, how much stuff are people going to be tracking yet? Well, that's a consultancy that's quite good at finding new things to consult on, but you know, it's just an increased burden. But I get why they've done it. I think it's helpful overall.
Yeah, it's interesting the consultancy point, because I'm assisting a firm in implementing non-financial misconduct, and it is really funny in a way where it can touch even like outsourcing and operational resilience matters and that kind of thing. And you don't realize, and maybe that's kind of the benefit of having a consultant's perspective in a way, because I guess when I was in-house, again, you only have a certain amount of resource. So you're utilizing your resource in the way that aligns with the risk appetite of the business. And you're saying, these are the key areas that we need to focus on. Coming out of that and being on the consultancy side, and I'm sure you will have found similar things, is the fact that you just have to readjust and think about things differently, and then you launch a tech platform. So it's that constant evolution of the way that you think about a problem, and I think there's room for all of that within an organization. It's just unfortunate that organizations have X amount of resource and they're not necessarily having the budget to then allocate resource to a consultant and a tech system and whatever else. And I'm pretty sure you actually wrote a LinkedIn piece about how to get board buy-in. And I don't necessarily recall whether that was about tech or consultancy in particular, but maybe let's touch on that, you know, the importance of sometimes just getting that independent view and having board buy-in about resourcing and budgeting.
Yeah, I'm going to post on it again, actually, so watch your space. Yes, so the relationship between the head of compliance and the board is key. I think there's some critical things that you would do. You would not want to get into a room with your board expecting them to make a decision that you hadn't already prepared the ground for. I think that back to the relationship management, getting in front, you know, getting people to trust you and have confidence in you. I think there's a number of things that you want to do with your board. Obviously, you want a shared view on risk appetite. I think it's important that the board understands what they're responsible for. Under the regulations, there's some stuff they can't get away from. It's their job. And I think there's a positive way of selling that, and that's to say, and I'm here to support you. Let's be clear, these are your responsibilities. There's nothing we can do about it. The regulator has expectations of boards, you know that. But my job as head of compliance is to help you through all of that stuff and to provide that kind of individual service. I think that can really help. I think trying to agree what success looks like with the board is really helpful. Trying to be honest with the board without putting it back on them. Just say, look, we've got these resources we've got. These are the decisions that I think we're jointly taking, and my recommendation as to how we deploy them. That means that there are some risks that we don't cover off as well as we might want to. And I think being able to be transparent about that rather than being told to shut up, because of course we don't want to, I can imagine some boards saying, don't bring us the bad news. No, you need to be able to talk about what the trade-offs are, what the deferrals are, and if there are some risks. So I think there's a number of things you can do, and obviously doing all those things in advance of having a problem is really important. One of the questions I love is it better if I tell my board that we've got a number of regulatory breaches, or if I don't? I don't know. Yeah, it's kind of a
exactly, and that's an interesting point, right? Because actually, in some instances, and there probably are boards that effectively take that gamble without documenting it, because there's number of, I guess, challenger banks, you would call them, that probably take more of or have a higher risk tolerance towards things like breaches than an established hedge fund or asset management business does. And to your point, that discussion around the risk tolerance for the board is super, super critical. And I guess to feed the board with the relevant MI or sufficient MI for them to then decide what that means in practice and kind of tailor that as they go, I think is really important. And oftentimes, when I just think back about board reporting in general, sometimes you just rehash. You've got one template and then you keep repopulating it quarter on quarter on quarter without necessarily stepping back. Again, when you don't have the resource, you don't always have the time to just step back and say, well, are the board getting the right information as the business is evolving and as the regulatory sphere is evolving, to actually make a decision that actually we're taking too much risk or we're not taking enough? Because that's my view of what compliance and risk is there for, that you take risk in a really balanced way, that you know exactly where you're pushing the boundaries, but in that guardrailed approach.
Yeah, I mean, completely. So there's a real skill to be able to say to your board, look, these are the risks that we're taking, whether you like it or not. And there are occasions where boards simply don't want to hear that. That's the truth. But obviously, there's a skill to be able to say to them and have that conversation, and that's why the relationships that we spoke about earlier are so important. Yeah.
And I guess one of the bigger emerging risks for boards, and I don't know whether you've had the opportunity to discuss these kind of through either your advisory role or through MCC, but AI. Can't have a conversation without talking about it. And I suppose it's more around kind of the governance aspect. So again, I've seen a lot of companies just be very bullish in the fact that they can't get away from just starting to integrate, starting to implement, go on AI, use LLMs, blah, 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 but without necessarily thinking about the guardrails. Now, with the FCA kind of doing more and more work, and the publication from Sheldon Mills that he's reviewing, or the FCA are reviewing exactly what the governance and the regulatory framework should look like within the scope of AI within financial services businesses. On that point, where have you seen things going right versus where have you seen things maybe not best practice?
Yeah, so I think it's probably early to be making some of the calls on where things go wrong, unfortunately. I think we normally find that out
I agree. Yeah, put you in the hot seat, but too soon to know. Yeah, agree.
So look, there's some really obvious things. You have an AI policy. Your staff is trained in what your generative AI policy is in particular. Confidential information shouldn't be shared with AIs in certain situations. We have AI as an integral part of our platform, and it's really good, the functions that it delivers for us. but that is housed at Microsoft Azure, and nothing is getting outside of that. Yeah, there's some obvious things to say, which I think everybody would expect. I think it's helpful if the regulator does get involved. There just seems to be, going back a couple of years, a bit of a discussion between the different regulators and the ICO saying, look, existing rules are fine to regulate AI. I don't think anybody would really argue that anymore. And I think, obviously, the natural point from the FCA will be to think about operational risk related to AI, and then, of course, consumer protection related to AI. I don't really have all the answers. I think it is incredible. It presents fantastic opportunities for organisations, but there are some people that are going to really get it wrong, and that will cost them. And I think it's easy to adopt some technology too early. I think there will probably be some financial institutions who use AI in a way that the FCA in 3 years' time or 5 years' time decides wasn't appropriate, and that will cost them. But it's also new that nobody really knows. What I do think is, if you're sitting there thinking that this doesn't affect me, then that would be naive. It affects all of us, and yeah, the world is changing, and you have to try and change with it. Back to a theme we've already had, Anastasia.
Yeah, and it's a real chicken and egg, isn't it, with when it comes to kind of emerging technologies and things like that. And this includes digital assets or crypto asset regulation. It's kind of, I feel like the regulator waits to see how the market's evolving before then adding the layer of regulation over the top. And I think that will always happen with emerging assets or emerging technologies, sorry, because I do feel like that there needs to be a bit of market activity for the regulator to actually get the data in order to be able to implement appropriately what their view of regulation is. But simultaneously, I feel like sometimes we try to, or there's a bit of a sensation that with emerging regulation, so again, when we're talking about, for example, digital assets, that the regulator is unfortunately not force might be the wrong word, but effectively the new regulation just tries to slot into the existing regulation and tries to make it fit. And it's quite a challenge, I can imagine, for the regulator to say, well, we can't do something completely brand new because all of these entities or financial services organizations have to then work together. So everyone has to read or understand the same language. But simultaneously, there will be challenges, I can imagine, with things like emerging regulation about crypto assets, where things in practice just will not mirror what the regulator puts down on paper. And I think that's kind of a core issue when you're trying to help newer businesses set up their entities. Have you had that experience?
Yeah,
Do you support crypto businesses?
Well, so let's just take the bits out of that. So there's two or three. I'm going to unpack that a little bit. There's two or three different points here. In terms of the crypto assets regulation, I think it was probably 8 years ago. Look, it might be 6 and it might be 9. That the Treasury Select Committee was incredibly critical of the Treasury, the PRA, and the FCA, or PRA, Bank of England, for not having moved already to try and introduce regulation for crypto assets. And here we are introducing them in 2026. So I find that absolutely mind-blowing. I've no sympathy with anybody on the regulator side. And I was earlier critical of politicians. Well, on this one, I think they were right. Now, looking back, maybe regulators would feel that by deliberately kind of slowing it all down and keeping people out, they've done the right thing, because we haven't had the blow-ups and the thefts of the blow-ups of digital asset firms and the theft of digital assets in this country that maybe we would have done if we'd had crypto regulation. But I can't accept that it was right that we've taken so long to introduce it. So, this isn't emerging. It's been here for a long time now.
I don't mean the technology itself. It's just the regulation is
emerging. The regulation should have, if you're asking me, the regulation should have been here many years ago. Okay, you're right. The regulations are just emerging, but I don't think that's acceptable. I'm kind of out there on that one. To come back to AI, the real problem with AI is that, so I wasn't a massive fan of Brexit. I don't think it's helped our financial services sector, but in Europe they move slowly and we can move quicker. I guess if we're not part of a much bigger European machine. Now, the reason I'm saying that is that AI is evolving at an incredibly rapid rate, and regulators are just not geared up to move at the rate that the technology is moving. Yeah, the system's going to break. So I'm not sure what happens there, but that is going to present a serious challenge, not just to financial services regulators, but to politicians and everybody thinking about the guardrails that we need around our society and around our financial services industry. I bought an annual license for ChatGPT in November, and that's now looking like a really bad idea because I'm hardly using ChatGPT. I'm using other tools, so that's how quickly it's moving. And yeah.
But the
So
thing is that regarding the legislation, I suppose part of and regulatory frameworks, etc. I reckon, yes, okay, I don't disagree that, but also AI is not new either. You know, that you were talking about crypto not being new. AI
yeah,
is also not new. Agreed that it's moving at a rapid pace now where it wasn't before, but that's not new. Again, so they've taken like it
something could have
feels
happened
like they
earlier.
just
Yeah, something
yeah,
could have happened earlier. So,
yeah.
but like I say, there was a bit of a bun fight between regulators all protecting their own patch going back a couple of years. So I think FCA and ICO and various people, I think I'm right in saying they were all saying regulations as they exist are fine. We can deal with what's coming at us, and I think that probably isn't the case. So you're right.
No.
AI, it's 3 years now, isn't it, since ChatGPT kind of everyone had a ChatGPT moment, 2 or 3 years. Um,
And
but so
I
I
guess,
yeah
but the principle, the actual technology for LLMs is not new. That's kind of more what I'm saying. ChatGPT just made it commonplace, and I think that's what enhanced the actual risk is not the fact that AI exists or LLMs exist. It's the fact that something like ChatGPT actually completely revolutionized what we can do with it, and it made it accessible to everyone. Whereas I guess crypto differently, although it's been around. Well, arguably, it's been on retail trading platforms for ages and ages, as you say. So
yeah
it's not that it wasn't accessible, but I think that the actual movement in terms of technological advancement will only really be felt when we have a chat GPT moment for crypto, or the
yeah
equivalent is like when everyone realizes what the technology actually does and enables you to do. And I think that will really transform financial services because where financial services are now, people just think of crypto assets or digital assets as, oh, that's just Bitcoin and it's not. It's going to completely revolutionize the way that we do financial services
yeah
too.
yeah
Um, and so I think, it's a real cultural barrier though. On the point of AI, I was reading something the other day. I don't know if you saw it, but there was basically a list of all the things that AI will completely dominate, and the years. So it had it against the years when it will
Okay, I didn't
happen.
see that, but that'd be interesting. Yeah,
Yeah, so the years of when it will happen, and but then it had this little paragraph underneath, and it said this is all subject to culturally whether or not we're ready for it. So there's things that, for example, it said 2028 it will be the complete revolution of code. So that's it. We don't need any more
yeah,
coders because Claude Code is going to solve everything. And then it's like caveat subject to cultural change and cultural pace moving towards that. And I find it very interesting, um, whether you're talking about AI or any other tech, because when you actually read things on LinkedIn or in publications or on the news, it's like job losses due to AI, blah, blah, blah. But the reality when you look at firms is they're still in the position where they're doing due diligence on an MCC. So I actually don't think firms are at that place where LinkedIn or the news would lead you to believe that they are, in financial services. I don't know what's your view? What are you seeing?
yeah. So I think in terms of what I see, and I guess we all have a limited view and perspective. Um, what I see is people looking for ways in which they can adopt AI and get some benefits. I'm not dealing with, say, large call centers or those types of people on a regular basis. I'm dealing more, I guess, the mid-market of professional financial services firms, and everybody's looking to what AI can do for them. But I don't think anybody is in that sector is getting rid of all their middle management there, or refusing to ever recruit another graduate again. Things are going to change for sure, but at the moment, AI is augmenting and enhancing what we currently do. And so our uses of AI in my compliance center, it does things like it reads meeting minutes and puts the actions in the system, so it saves somebody some time. It summarizes regulatory changes. It's those sorts of things that's saving time and helping people be more productive. And that's absolutely the starting point, but it's not leading to the wholesale firing of a compliance team. I just don't think we're there yet.
No. And in terms of kind of integrating tech within compliance teams, what have you noticed to be the biggest kind of barrier to integration success?
So honestly, there's a lot of people that don't like change, repeating a theme that we had earlier. We probably battle as much with inertia as we do with competing systems. I think not everybody in compliance is educated in how to manage change, particularly wants to go to their board and promote it. So if anything, it's kind of inertia, which does appear to be one of the biggest challenges realistically. I think people might have had bad experiences of buying tech and not using it. I think those sorts of things happen. I think people are worried that there's implementation risk. And I think it's quite easy to do nothing if you're not convinced you're going to get massive benefits. So that's, they're kind of some of the challenges we see. And we try and work with our clients to overcome them, obviously, and make sure that people do get a really good return.
So you have an integration team internally. It's just my personal interest.
Yeah. So we can work with anybody. We typically, when we sign a client, we would go through a process of helping them integrate. I say integrate, help them implement, and we have a structured process that we normally use. But we're a modular system, and no two clients are the same. Everybody buys different modules, all of that stuff. So, yeah.
You mentioned something earlier. Nobody teaches compliance officers how to implement tech or about tech implementation. So now that we're moving further and further into kind of a tech-enabled world, how do you think, or how do you foresee that education will be given? Or do you think that firms will just be increasingly hiring more technology people or data people?
Yeah, it's a really interesting question. I am not sure on what's going to happen. What I typically see is that most people understand that there is an imperative for change, but they don't necessarily want to embrace that all day, every day, and they've got day jobs and all that stuff. Getting budget can be a challenge. Fighting for budget can be a challenge, and if you kind of think of it as the technology budget, not the compliance budget, well, there's no way that IT or operations or whoever it is going to let go of their budget so that you can implement better compliance monitoring software. It doesn't work like that. So what I see is that compliance is complex, and that strong heads of compliance will understand that they've got a technology challenge and they should be developing and executing a tech strategy. And that tech strategy would have buy-in at senior level, and they would get support appropriately, whether it's consultants like yourselves or whether it's an internal IT team, whatever it might be, to make sure they execute their tech strategy effectively. And if they do that, then the prize is really high. That's why they should do it. But it's difficult. And you're right, compliance is increasingly a tech-enabled world. So the imperative to change is very, very strong.
Yeah. And I think, when you're looking at really large organizations, I have friends and colleagues alike that work in your Goldman Sachs and your HSBCs, where they have your kind of days where everyone gets in a room and they have to like brainstorm a new idea for how they can use AI. And their own personal sandboxes, I suppose. But in medium-sized or smaller organizations, you just don't have that luxury. And it'll be interesting to see how far those larger or well-resourced organizations, how well they fare, I suppose, against those that are probably more traditional at the moment. And how those integrations, whether the more traditional firms end up buying more systems versus the build in-house. Actually, what's your view on the SaaS world?
Well, it's $1 million question for me, literally. So it's obviously large organizations are looking to maximize something like AI, but they will have a much tougher process to go through, obviously, to be able to execute it and to implement change. So I think organizations, whatever their size, that are nimble, are going to be the ones that win. And I think that's probably always been the case, but it's even more the case now. So having an open mind, having a culture whereby we're prepared to experiment, having the right guardrails in place for sure, but being absolutely engaged in the change process and saying that there's a better way of doing everything we're doing today. It's going to change anyway. There's a better way of doing it. We're going to keep moving with it. And I don't think perfection exists as well. I think that's probably a bit of a myth. I think you've got to be prepared to live with a bit of a bit of the fact that we tried something, it wasn't perfect, and we moved on to the next thing, and that's what works.
Yeah.
Yeah.
And maybe I think that's a good place to finish.
Yeah.
Yeah. So really want to say a big thanks for joining on the Tech Mini series that we're hosting for the next few weeks. And yeah, it's been a really interesting conversation, and would love to keep in touch
Yeah, of
to
course,
see.
Anastasia.
Yeah.
And